Right now, while most people are earning pennies on their savings, some banks are paying over 5% AP. That means on a $10,000 balance, you could earn $550 per year instead of the measly $5 most big banks pay. If you're still parking your money at Chase or Bank of America earning basically nothing, you're literally throwing away hundreds or even thousands of dollars every single year. Welcome back to Cashflow Kingdom, where we make personal finance simple for beginners. I'm here to help you build wealth one smart decision at a time. Today, I'm breaking down the absolute best high-yield savings accounts available right now in 2025, including the exact APY rates, minimum balances, and which ones I personally recommend for different situations. By the end of this video, you'll know exactly where to move your money to start earning what it's actually worth. Let's start with why this even matters. The average savings account at traditional banks like Wells Fargo or Chase pays around 0.1% AP. That's basically zero. But high-yield savings accounts from online banks are currently paying 5% to 5.5% APY or more. Here's the math that'll shock you. If you have $5,000 sitting in a traditional savings account, you'll earn about 50 cents per year. But move that same money to a high-yield account earning 5%, and you'll make $250 per year. That's a $249.50 difference for doing literally nothing except opening a new account. The reason online banks can pay these higher rates is simple: they don't have expensive physical branches to maintain. They pass those savings directly to you through higher interest rates. This isn't some get-rich-quick scheme, it's just smart money management that anyone can do. My number one pick right now is Marcus by Goldman Sachs, and here's why. They're currently offering 5.4% APY with no minimum balance and no monthly fees. Goldman Sachs has been around since 1869, so you know your money is safe. What I love about Marcus is their simplicity. There are no confusing tiers or requirements to maintain the high rate. You get 5.4% on every dollar from day one. The interface is clean and user-friendly, perfect for beginners. They also offer excellent customer service, which is rare in the online banking world. The only downside is there's no ATM access, but honestly, this is your savings account, not your checking account, so you shouldn't be withdrawing frequently anyway. Marcus also compounds your interest daily, which means you earn interest on your interest. Over time, that compound effect really adds up. I've been using Marcus personally for over 2 years and have had zero issues. CIT Bank's Platinum Savings is offering 5.05% APY, and while that's slightly lower than Marcus, they have some unique advantages. First, they have a lower minimum to open, just $100 compared to some competitors requiring $1,000 or more. CIT Bank has been around since 1908 and is FDIC insured up to $250,000, so your money is completely protected. What sets CIT apart is their customer service. They actually answer the phone quickly, which is huge when you need help. They also offer a savings builder account that rewards you for consistent deposits, which is perfect if you're just starting your savings journey. The rate is tiered, so you need $5,000 to get the full 5%, but even with smaller balances, you're still earning way more than traditional banks. CIT also has a solid mobile app that makes it easy to transfer money and track your progress. They've consistently offered competitive rates even when other banks drop theirs. If this video is helping you understand high-yield savings accounts, hit that like button and subscribe for new money tips every Tuesday. SoFi is currently offering 4.6% APY, and while that's not the absolute highest, they offer something unique: no account fees ever, and you can boost your rate by setting up direct deposit. If you direct deposit at least $1,000 per month, you can qualify for their higher tier rates. What makes SoFi special is they're more than just a bank. They offer financial planning tools, investment accounts, and even career coaching for members. It's like having a financial wellness platform, not just a savings account. SoFi is also great for young professionals because they understand the modern financial landscape. Their mobile app is probably the best in the industry, with intuitive design and helpful financial tracking features. Plus, they offer member benefits like career coaching and financial advisory services. The company went public in 2021 and has been growing rapidly, consistently adding new features and benefits for members. Before you rush to open any high-yield savings account, here are the red flags to avoid. First, promotional rates that drop after a few months. Always check what the rate will be after the intro period ends. Second, high minimum balance requirements. Some accounts require $10,000 or more to get the advertised rate, which defeats the purpose for most beginners. Third, excessive fees. Monthly maintenance fees, transfer fees, or closure fees can eat into your earnings. Fourth, limited access to your money. Make sure you can easily transfer funds when needed. And here's something crucial: always verify the bank is FDIC insured. This protects your deposits up to $250,000 even if the bank fails. Also, be wary of accounts that require you to jump through hoops, like making a certain number of transactions per month to maintain the high rate. The best high-yield savings accounts are simple: you deposit money, and it earns a high rate, period. This is where strategy comes in. Financial experts recommend keeping 3 to 6 months of expenses in an emergency fund, and a high-yield savings account is perfect for this. But don't just dump all your money here. These accounts are for your emergency fund and short-term goals, not long-term wealth building. For money you won't need for 5+ years, you should consider investing in index funds or other growth assets. Here's my personal approach: I keep 6 months of expenses in my high-yield savings account, plus money for any big purchases I'm planning in the next 1 to 2 years, like a vacation or car down payment. Everything else goes into investments. Remember, even at 5% APY, you're barely keeping up with inflation over the long term. But for money you need to access quickly and safely, high-yield savings accounts are perfect. The key is finding the right balance between accessible savings and long-term investing based on your personal financial situation. Ready to make the switch? Here's exactly how to do it safely. First, open your new high-yield savings account, but don't close your old one yet. Transfer a small amount first to test everything works properly. Once you're comfortable, gradually move your money over. Keep your old account open for at least one full statement cycle to catch any automatic transfers or payments you might have forgotten about. Update any direct deposits or automatic transfers to your new account. Most high-yield savings accounts make this process easy with step-by-step guides and customer support. The whole process usually takes 1 to 2 weeks to complete safely. Pro tip: some banks offer bonuses for opening new accounts, so look for those opportunities. But remember, don't chase bonuses if the ongoing APY isn't competitive. And here's something important: this isn't financial advice, just educational information. Always do your own research and consider your personal financial situation before making any decisions. So there you have it, the best high-yield savings accounts for 2025. My top picks are Marcus by Goldman Sachs for the highest rate, CIT Bank for great customer service, and SoFi for the all-in-one financial platform approach. Remember, the most important step is just getting started. Even if you only have $100 to put in, that's $100 that should be earning 5% instead of nothing. Which account are you most interested in? Let me know in the comments below. And if you want to learn about investing that money for long-term growth, check out my video on index funds right here. Don't forget to subscribe for new personal finance content every Tuesday, and I'll see you in the next one.